next. Now, Michael Vogelzang is president and chief investment officer at Boston Advisors. He oversees $1.7 billion in assets. And, Michael, let me ask you first about the bad news that we saw this morning. I mean, home sales, kind of a depressing figure. It was so bad.
Yeah, they were pretty putrid. We look at this housing cycle in a longer term picture. These are real structural changes that the economy is going through. I don't think it's a huge surprise that they're going to be weak for a while. Back in 05, I think it was 69% of households actually owned a home. Long-term average is well below 65. We're sort of 66.5 or so percent. The 2000s, we saw every government policy, every possible way we could to encourage household formation and purchases of homes. We saw that rally. We saw a huge pull-in. It's sort of a big sucking sound of everybody buying a house. I think we're just simply working off that bubble. It's going to take a while to correct.
Let's walk everybody through those closing numbers on this Wednesday, March 23rd. Folks, we're just finishing off our highs of the session. We are, though, up 4 out of the 5 past trading sessions. A little bit of a pullback yesterday, but again, some slight gains today. 1297, your last read on the S&P 500, up 0.3%. Light volume again in today's session. 12,085 on the Dow Jones Industrial Average, up 66 points, up about 0.5%. Let's also get an update for you on the NASDAQ. That average up 14 points, up 0.5%, coming in at 2698. Let's also get a trader's perspective. For that, Rick Fier is equities trader at Conifer Securities. That's a broker-dealer with $7 billion in assets under management. Rick, good to have you here. So what is your perspective? And let me just throw another headline. The Portuguese parliament rejecting the government's deficit cutting plan. We're watching also what's going on in Europe. That's a big development. Add it all up for us, and what do you think's going on?
That's a prelude to a bailout, or at least an attempted bailout, right?
Oh.
Yeah, and I mean, the bailout will come. I mean, that's what makes last year a lot easier than this year. We definitely believe that, the easiest money's been made in the last 2 years. Last year we had all the sovereign debt crisis, and we knew that the governments would step in. This year's a little bit more difficult. The wall of worry is a little different with all the Mideast turmoil and the thing in Japan where it was just, unforeseen.
Right.
We are a lot more bullish now than we were last month. When the market was hitting new highs and we had that February blow-off to the upside, you knew something was going to happen to knock the market down. You didn't know what it was. So now we know what it was, and we're advising our clients really to trade more now. We see ourselves in a trading range. When you get those big down days, buy them. When you get the big up days, sell them. And use the volatility to your advantage to increase your performance. And they've been doing it and pretty well.
Michael, what do you think? I mean, Rick makes a good point. We make a big deal out of Portugal. It's a very interesting story, obviously. It's a big red sticky headline, but you kind of knew it was going to happen, didn't you? Is it priced in already?
Well, again, the big picture here is that we're going to be fighting against fiscal responsibility and populism. We're going to be fighting this almost every country. We're certainly doing it here in the United States, Wisconsin being a good example of that. This is going to be a very long-term problem. Right now it's in Europe. Portugal's the hot spot today, but this is not the last time we hear this story. So keep your headlines well written.
When does reality settle in? As you say, Michael, I mean, we're dealing with it here also in the United States. I mean, at some point, the Fed maybe does take its foot off the gas pedal and stops doing any kind of QE moves here. I mean, when that stops, when everybody starts to realize we've got to get our fiscal houses in order, I mean, what kind of impact is that going to have potentially on the markets in your view?
Well, it's short-term, long-term here. I mean, I think short-term it wouldn't be a great idea. You're going to slow down the economy, probably hurt corporate profitability. But at the end of the day, long-term, if we're going to have a country that's reasonably competitive or strongly competitive, we're going to educate our kids, we're going to take care of all the social responsibilities we have, we've got to get our fiscal house in order, whether it's defense or keeping the roads and streets clean. This is a very big long-term issue for the country, clearly for Europe as well. And it's going to be interesting to see how the sort of populism versus the fiscal responsibility details play out. But I'm not terribly hopeful. I think it's going to be pretty bloody battle. It
could. I mean, Rick, let me get your take on this. I mean, we definitely knew that Portugal was coming. Everybody here in the newsroom has been bracing for it all day, obviously today. But what happens if, if you're a sky is falling kind of guy, you can say, oh, then Spain is next and they can't afford it and it's the end of the world. I mean, Europe could be a real problem.
It could be. And going back to the QE2 getting pulled back and all of these problems, it's actually a positive in the market because you want the government to get out of the marketplace.
Well, it says we're stronger, basically, then?
Right, and you want to see what's below. You want to see, are there bids in the market? Is the market just going to fall apart? We don't believe the market's going to fall apart. We think the economy is improving. There's always going to be headwinds. These headwinds are very strong. And that's why we think trading is the best way to do it. If you could come in and you can make a buck on a stock in a day or 2 days and get out, you're better off doing that than, it was easy to make money in the last 4 months. All you did was buy long and hold.
If we can, folks, because we've been talking to, actually, we talked to Marianne Bartels last week, and she's also been kicking out some other research today. I want to just bring in some sound from her. Bank of America, Marianne Bartels, she kind of got technical with us this morning. Listen up, everyone.
Last year, the market corrected peak to trough from April to July, 17%. And yet the year turned out to be fine. So we're just looking for a correction of the rally that we've had since part of the July low. And then we still think the market has ability to get to 1,400.
Rick, you're sitting here nodding big time.
Yeah, I kind of believe in the same exact thing. You want to come into the summertime, we're going to chop around for 4 or 5 months and then have a decent end of the year. I kind of think the weakness here is kind of precluding a little bit of what we're going to see in the next quarter's earnings. Maybe they won't be as robust and as wonderful as the last quarters were, but that's going to be hard to duplicate anyway. Those were just phenomenal. So this might just be, it's going to be a little bit more of a stock picker's market. You're going to have to watch. Like I said, the easy money's been made. Focus on your portfolio, focus on your names, and just focus on your put money.
Hey, Rick, it's Julie here. I want to bring it back to the immediate question. When you look at stocks tomorrow, when you look at this Portugal head, are we going to see a negative reaction?
We've been up 4 out of 5 days. Will the Portugal be the reason we have a negative day tomorrow or we pull back? It could be the news saying that's the reason for it. But like your prior guest just said, we've been up for so long. We just went up from November till February in a straight line, 3 down days the whole time. You couldn't lose money to save your life. Now all of a sudden it gets a little bit more difficult after that February updraft that nobody saw coming. So that's why we're saying, yeah, trade. Today we closed up. We had a nice reversal. Maybe put on some sells. It's obviously too late now. We're short.
I'm wondering, too, how earnings kind of plays into all of this. We're starting, we continue to get some earnings. We had a bunch of tech yesterday, some today. Red Hat actually crossing. Sheila, why don't you break it down for us?
And Carol, Red Hat just crossing right now. It was a solid beat on both profits and sales when it came to Red Hat. So for fourth quarter profits, 26 cents a share. That does beat analyst estimates of 22 cents a share. On the top line, $244 million. Again, beating those analyst estimates of $235 million. We are seeing the stock right now trade in the aftermarket. No comment as of yet from the company about its Japan operations. We've been looking through the press release. Haven't seen any comments yet. One other tech mover I want to mention on earnings is Micron Technologies as well. Company reporting EPS of 7 cents a share. So again, a big beat for analyst estimates compared to 2 cents a share. Also a beat on the top line, $2.3 billion. Street was expecting somewhere closer to $2 billion. That stock also trading up higher in the aftermarket. So both big wins for Red Hat and Micron right now. We're seeing both of them trade higher.
Michael, what do you think about the way earnings have been going? We talked to Lincoln Ellis a lot out in Chicago, and he's concerned that the growth that we've all been so excited about is just going to taper off and be much less exciting by the end of this year. Combined with the gains that we've already seen since March of 2009, that would seem to not bode well for any more big gains in the stock market.
Yeah, we've annualized the big gains, right? That's part of the reason why the market's been up so much in the last 2 years. We've now annualized big, almost triple-digit gains in some cases. So clearly the future gains are going to be lower. We think they're still going to be positive, but we expect that the progress is going to be harder to come by. The real concern here is, what does Japan take off on a particular company's earnings growth? So, if you look at a company like Nu Skin, the estimates are coming down. We're talking about, a 2 or 3% haircut on their growth rate. How much of that's going to happen to a broader swath of global stocks? We think Europe's got some problems. We've been worried about Europe for a long time. We've been underweight Europe in our allocation portfolios. We like emerging. Look, in a very real world, we're all living in China's world, man. They and the other emerging countries have their fiscal houses in order. They're acting well from a monetary perspective. And it's the basket cases like the developed countries, frankly, that can't get their fiscal house in order, can't get their monetary policy back to sort of normalcy, that are causing difficulty. And you can see it happening in the U.S. dollar. As a colleague of mine said, in the currency that used to be known as the U.S. dollar reserve currency, right? we're now at lows, multi-year lows in the U.S. dollar, when this kind of trouble around the globe should be causing the dollar to rally. It tells you an awful lot about the psychology around the U.S. dollar, the U.S. economy, and the long-term profitability and competitiveness of the U.S. economy. This is real noise. This is real signal. This isn't noise in the market. This is telling us something, and you got to pay attention.
If you missed what Michael said just now, just watch Rewind tonight, because I'm going to cut that entire soundbite and replay it. Very interesting stuff. What do you think about that, Rick? I mean, it's concerning, but it's kind of almost a done deal now. And
exactly, it's concerning. We could all talk about it, but the bottom line is there's no place I would rather be invested in than U.S. technology stocks, to be honest, because they derive a lot of their revenues from overseas, so that you get the gain instead of the loss on the weaker U.S. dollar. And it's what we do. America, we're technology. That's what we provide, and that's what we do best. So I feel
Although
bullish
Warren
on
Buffett
America.
doesn't want to invest in Apple.
Well, Warren Buffett knows what he's doing, but our clients, I think we know what we're doing too. Yeah, no, I hear you.
No.
There's enough for it to go around.
Hey guys, we got to run. Good stuff though. Rick Fier, thank you so much. Michael Vogelzang, always a pleasure. We appreciate it, guys, for walking us through the close today.